it's a lot easier for me like that.
Oh yeah, no, for sure. I like that too. I mean, I'm more of a like if I see the content in front of me every day, then I watch it, and
Yeah.
it helps me out a lot. Cool. All right, so basically, one on ones is just kind of like catching up, right? What have you been doing well with? What have you struggled with? If you have any questions, anything like that, anything that I can like clear up for you.
Yeah.
So how's your like your week been? Have you been trading anything, or have you been?
I I haven't. Let me see. Let me pull it up.
Yeah.
I was doing good, man. I did good until I decided to trade AUD and the Japanese yen. I don't know if you could see this.
AUDJPY. Okay.
I don't know if you could see that.
Um, let me hold up. Let me make it big. Hold up. Okay. Oh shit, nice. You got some good profits in there. Oh,
Yeah,
oh wait.
into that $400.
Wait a minute. Wait a minute. All right, wait. Negative $463. Okay.
That one, yeah, that's pretty much like, well, I had like a few, a dollar, $3, $10.
Let me see your big. What's your biggest profit though?
Biggest profit was 45
Okay. And it was based off of what lot size did you use?
point 50.
Okay, so you caught 10 pips off of that. All right. And then the other one, the negative 400 and some dollars. Like, what what lot size was that?
That was also point 50.
Holy shit! So, okay, so you held. Let me see. You
Yeah,
had to see negative.
I I held on to that for a while because I'm like, in my head I'm like, it to me it seemed like it was going down.
Mm-hmm.
So I was like, I'm just gonna hold on to it to see if it just goes down. Did I
Yeah.
do a sell on it? Yeah, I did a sell.
Okay.
And it just didn't. I was like, it was driving me crazy, like seeing that number like increasing. So I was like, no, I'm just gonna close on it.
Yeah. Yep. I hear you. All right. So let me understand something. Tell me what price did you get in on, and
Yeah.
let me pull it up, and there you go. All right. All right. So you got in on. Let me go on the 4 hour time frame. All right. What was your price?
So I got in on 10/17, October 17th at 73.717.
7 7
717.
like that.
No,
Oh.
73.717.
Oh, 717. Okay. All right. So you got in. Okay. So you got in based off of. I'm assuming you were thinking the market was going to drop right after here, right after
Yeah.
this sort of like rejection here, right?
Yeah.
Okay. What was the exit where you got out? Where you finally was like, you know what, I'm out.
I got out at, I'm guessing that's like the next number, right? Right next to it. Is that
Mm.
what it is?
Oh yeah, next to it. Yeah, the number next to it is where you closed at.
Uh,
Yeah.
it's it says 74. Oh yeah, 74.724.
Okay. Okay. Literally. Right on. Literally where it like peaked at, and then it sort of dropped. Okay.
Yeah.
Cool. All right. So let's try to understand exactly what happened here. Um, let's go to the daily time frame. Okay. Yeah. Okay. So so on the daily time frame, right? I'm assuming this is where you got in at, and I'm gonna go ahead and highlight that this candle here. Okay.
Hmm.
So based on the overall trend, right? The what the market's actually doing. Where did you identify your last lower high before you transitioned, or do you think you're still on a bear's market? What do you think? What kind of trend do you think you're in right now?
Based on the daily,
Mm-hmm.
you can't see what, like, you can't see my mouse, right?
I can't, but you can annotate. Go up
Okay.
to the zoom settings, and then there should be like a little option that says annotate.
Okay.
It's got like a little pen next to it. You could start drawing on my board.
Okay. Um, can you see that?
Where'd you draw it?
No, you can't see my mouse.
No.
No. Oh, here you go. Okay. Um.
So break down structure for me right now. So start from the left side, right? Start from that very top area right here. Start right there and break it down. Break it down to your last, that was a lower high, that you had your last lower low, then you had a lower high, lower low. And then where'd you have your transition to where you went from a downtrend to an uptrend? So help me understand that. Like where did you start your transition? Or where do you think it transitioned? Or if it didn't, do you think you're in a downtrend and why?
Okay, so right here, this is my lower high, right?
Yes. Nice.
Lower high, lower low, right here. Uh, lower high, lower low, higher high.
Okay. Let me. All right, hold up, because I can't see I can't see what you're doing. All right.
Okay.
So let me guide it
Right.
with you. Okay. So you
Yeah.
said lower high.
Yeah.
You said lower low here.
Yeah.
Okay. Cool. Then you had a lower high here.
Mhm.
Okay. And then you had a lower low right here.
Right.
All right. Now, what happened right after? I mean, the market then just went straight up, right? So
Right.
what does that mean? That means that this lower high was actually broken. Okay.
Mhm.
This lower high was broken, and then the market created a new higher high right up here. Okay. So what does that mean? That means that you are stuck in between these two zones. All right.
Mhm.
You're stuck in between these two zones. So we're going to go ahead and highlight them to understand that these two zones are very important. I guess I'll go ahead and leave that. And then this zone here. Okay.
Okay.
We're going to go ahead and color coordinate so we know that's daily. Daily. All right. So I talk about this all the time. The markets can do what? The markets can do whatever they want to do in between these two zones. So as long as the market does not break this zone right here, we are still good for an overall uptrend. Why? Because we had the transition here. This was your break of structure right here.
Yeah.
Okay. This candle here and this one here was your break of structure. So you have your lower low, right? This came from a lower low, higher high, and then what happened right here? It created a what?
A new higher low.
Yes, a new higher low. So you thinking that the market was going to reverse right here, this sideways motion, and this is what we've been talking about for quite some time, was like the whole uh, rally base, right? So these are areas of where the market like to consolidate, and they're considered to be areas of like an area of an impulsive move. So you had some sideways motion, and then the market just took off, right?
Hey,
You had
sorry, I just lost audio. Hold
oh
on.
oh okay.
Okay, there you go.
Okay, you can hear me?
Yeah.
Okay. So going back to this is that sideways motion that we see a lot of the time. So one thing that I tell you guys all the time is don't look just for reversals. Reversals are when you assume that the market's definitely going to turn around like this. This would be considered a reversal, right? Because this is considered a counter trade. We're on an uptrend, right? So for you to take any sells, you're counter trading, which is fine. I mean, it's okay because this entire move on the way down was a 200 plus pip move, which is great. I mean, if you catch a sell on this one, good, because now you're trading both ways. You're not just sticking to one direction the entire time. But notice that, like, even here, notice that here you had a lot of sideways motion. Okay, when this happens, right, you see a lot of this sideways motion going on. You expect the next, like, that one big candle that's just gonna drop. This is considered to be a continuation. All right, continue. Is that how you spell it?
Yeah.
Okay, all right. All right. A continuation. A lot of us look for these reversals every single time. Why? Because we want to catch the market at the very top and then get the big move. That's not the case all the times. Like, right? We want to see if 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 we can catch the trade from this end right here, right? As soon as we found a strong level support, this is a good reversal point, but as a trend reversal. Your trend
Hmm.
reversals are your higher lows that you want to catch and your lower highs you want to catch. Now, when you have the market doing this, where you have some more sideways motion, what is the likelihood of the market doing next? More than likely, if you're still on an uptrend in this example, you shouldn't be thinking about sells right away. And plus, you weren't even at a, you weren't even at a strong level of resistance. I don't see anything strong right around here. It
Hmm.
was stalling, but not enough for the market to turn around. This right here, you seeing these wicks on the daily time frame, and
Yeah.
then the ones on top. Um, this tells you that this is going to continue going right back up. You notice these patterns right here. These patterns are those sideways motions. When we get these sideways motions, they're very easy to trade because a lot of the times, more than likely, the high probability of it is that it's going to continue going right back up. So you had your higher high, higher low, and now the market is making a new higher high. What the fuck does this guy want? So and not only that, but you actually just broke a where you're breaking a zone at the moment.
Hmm.
So this market overall, though, you're on an uptrend. Based on your daily time frame, you're on an uptrend.
Yeah.
So you looking for a reversal and getting in on a sell was not valid enough. This wasn't enough reason for you to get into a sell. So think
Hmm.
about overall structure. Always think about overall structure. You have your lower low, higher high, higher low, higher high. So what can you expect next? What do you think the market more than likely can do next? What's like the next big move? What do you think?
Um, break that last, continue going up, break that
Mm-hmm. Yeah.
last very high.
Right now you could potentially expect the market to push down,
Hmm.
right? Come right back to this area here of an impulsive move, which is identified on the daily time frame. And then once the market comes right back down, it comes right back down, retest that area, then you can expect the market to push up higher and potentially get to this area here, which is another big area of impulsive. This is the start of that impulse move right there. So that can be a target. If you go to the weekly time frame, you definitely identify it here. This is the beginning of an impulse move right here. You had a some sideways motion, and then you had a strong, just two strong bearish candles that followed right after.
Hmm.
So right now, your target can be the start of this area here. That can be your target number one. If the market does continue to go back, push up higher, where is? Oh, there you go. Target one. And then if the market does get to our target one and it continues going right back up, then your second big target can be the start of this impulse over here. Obviously, that's going to be long ways from now. It's going to more than likely take you a few months to get there. But if you're
Hmm.
following this pair like that and you're studying it like that, then I mean, once you get there, you'll be like, holy shit! Like I waited that long and now I hit my target too. You know what I mean?
Yeah.
It's
Hmm.
it feels rewarding. It feels great that you were able to predict something.
Yeah.
Um, so so I think that's where your mistake was. You looked for a reversal right around this area, and I think you might have looked at it on the H4 time frame rather than looking at the daily time frame. Is that the case, or what were you looking at?
Yeah. Most likely that's what I did. Yeah.
Okay, so you were looking at the 4 hour time frame. Um, a lot of the times, don't stay away from the lower time. H4 is okay. You can look at H4. That's fine. But if you're getting in on like your smaller entries, right? You're getting in on the smaller time frames for your entries. Get out of those. Like, don't stay on that. Just while you're in the trade. Get out of these lower time frames because they're gonna make you double think all kinds of things. You're gonna be like, nope, this is definitely not going to go my way, and then you start seeing the candles just going up and down, and then until
Yeah.
it goes against you, then you're like, oh shit. But when you get in on an entry, always go up to your daily your higher time frames. That way you see the bigger picture, and you're psychologically you're thinking, well, no, I got in at the right area. Maybe I got in a little too early, or maybe I got in too late. But in this case, you were actually trying to go for a reversal, which wasn't enough reason for you to actually go into that reversal. I would understand it up here. Up here, I would
Mhm.
say, hey, you know what? I think this is a good idea because it's not breaking it; it's just testing it. So, um, so I can go with this one. With this one here, if you would have been on the daily time frame, I think you wouldn't have made that that sell trade. I don't think you would have opened a sell here. I think you would have seen the bigger picture again, understanding that you're on an uptrend at the moment, and you would have kept this going, until you get a new higher high or whatever the case is. But
Mhm.
not only that, I mean, you also have some other confluence, other reasoning as to how you could potentially get into that sort of trade or just be a little more patient. Um, I'm sure obviously the market was right down here somewhere, but um, let me see on the 4 hour time frame. Yeah, I don't really see anything like that. Too obvious. Unless this one here, you can connect these two. You have a start from right around this area here. You would have had this one, this one. This was still not there, so I don't, you wouldn't have been able to see that. But then if you would have scaled down to get this one as well, you would have understood that you just tested a strong level on the weekly time frame, and your next target would be going right back up, right? Um, so there's some things you can do to really clear up the information in front of you, right? If you're a little confused about something, go up to the higher time frames and try to find these like channels, try to find these levels of support resistance, and then understand that if these levels are tested once, more than likely it's gonna go right back the opposite direction, right? Until
Mhm.
it hits this level up here, and whether if it hits again, you can expect it to drop big time again into the same level, retest this one, or break it. So any level, any trend line or any zone that's only been tested one time is a strong level because it hasn't been tested. Then once the market gets to around that area, you'll be able to see how strong that level really is.
Mhm.
So you can look for either a sell or a buy opportunity, whatever the case is. But on the daily, you would have been able to see that you tested this multiple times. This this level of this trend line, this weekly trend line. Then the market came right back down, and then it just continued going right back up. So what is like the bigger picture, right? The bigger picture is the market came from all the way over here, retested tested this trend line, and then
Mhm.
what's the highest probability of a rejected trend line or a zone or anything like that off of the higher time frames? Then you could expect the market to come all the way back up here.
Yeah.
Okay, that's how
Mhm.
you can tell like your bigger picture, your bigger if you're if on the daily time frame you're on an uptrend, don't be looking for sells every single time. Try to look for your buys, your continuations. Just because the market is only stalling in an area for quite some time does not mean that it's going to reverse right away. You need to like I understand if you would have gotten in, say, I don't know if you got in here or you got in right here. That's what I'm trying to figure out. So you got in here, which what was the date you said? October what?
October 17th, I think.
Okay, so you got it right here. October 17th. Yeah, I think your reasoning was seeing this level or this H4 resistance area
Yeah.
being tested. I think you took a sell off of that. Um, and it's okay. I mean, I don't blame you. I mean, if you would have waited a little bit longer though, seeing this strong bullish momentum here, and then waiting for this reversal, you needed to see something more valid. You need to see something that told you this is definitely gonna gonna turn around. You're gonna, you know, I'm going in on a sell. This is gonna turn back around. I'm going back into that downtrend, but I
Mhm.
don't see it. I mean, you have if you're doing your structure on even on your 15-minute time frame, you have to do it on every time frame, even the ones that you're getting your entries in on. So you have your lower low, I would say, higher high, higher low, higher high, higher low, lower high, higher low, lower high, higher low, higher high, and then you didn't have anything. You had a potential higher low, but the market never pushed up any higher than this previous higher high. So what was
Mhm.
your two? What was your two valid small little zones that you could draw even on the 15-minute time frame? Identifying your last level of higher low and a higher high, right here. So your safest way to enter the market was for you to see that transition happen on this lower time frame as well. I'm not sure what was your entry. Do you remember what time frame you got in on your entry?
Most likely either 15 or the 5 minute.
Okay, so you definitely would have been able to see here on the 15-minute. Um, so notice that again you have your higher low and your higher high. The market only came right back down to around this area here, and then it skyrocketed.
Mhm.
Yeah, you see that? So
Yeah.
even on the lower time frames, you use your structure. You use, until if you would have had this. Now, if you would have had this happen where the market came all the way down and broke out of this last higher low, then I would have been like, you know what? There's a good entry point where the market would reverse, retest this level here, and then go right back down. At that point, I'd be like, all right, this is definitely going to reverse, and you'd be able to see it all play out, even like on the higher time frames. That means that the market's definitely reversing. But as far as your entry goes, I think you got in a little too. How would I say it? I think it was more of an impulsive move, and what I
Yeah.
mean by that is like you wanted to get in right away.
Mhm.
You weren't patient enough to see what the market's actually doing. Um, going back to the 15-minute time frame, I think if you would have seen this, maybe like this break of this ceiling, okay, this break of this ceiling, you would have seen this break and you would have waited maybe slightly for a nice little pullback and then get in. At that point, you would have gone the right direction. You would have been in the right trade. In the and you would have caught. I don't. I mean, you would have caught definitely more than that. But do you understand the picture though?
Yeah.
Even on the higher time frames, when you see this, when you see your valid higher lows and your valid lower highs, use them on the lower time frames as well, because those are giving you direction but in more detail. Okay,
Mhm.
so if say for example you're on an uptrend on the daily, when you get to a potential a strong support level and you start seeing you wanted to create a higher low on your daily, you go down to the lower time frame, and what you're going to see is you're going to see a minor downtrend. Okay, you're going to see something like this, a minor downtrend, until you see that transition happen on that 15-minute time frame. You would have seen the market break out of this level here. Okay, and then the market
Mhm.
come right back down, retest, and go right back up. If you would have seen this off of a higher low on the daily time frame, then you would have been good to go into those trades, because that's what you want to see. But you're still applying your lower high, lower low, lower high, lower low, higher low, higher high, even on the lower time frames, on your entry time frames. You still have to use the same thing, because that's going to be a safer way of, and a more patient way too, because that really like works on your patience big time. You want to see that happen, but being that it didn't, okay, being that it didn't even transition once, I think you should have changed your bias or your overall idea as a sell and go into a buy. One
Mhm.
thing that I talk about all the time is always have two opinions of the market. Don't just have one. If you have a plan A, have a plan B. Your plan B is going to be when the market goes against you and it doesn't really play out how you want it to. So you go with the market. You try to, in this case, if you're trying to see a sell, because you're 100% sure it's going to tank, it's going to go the opposite way, and
Mhm.
then the market doesn't give you the actual clues that you want to see, right? It's not giving you the motive to get in, and you're like, oh shit, like what's going on in the market. um, that's when you go back to overall picture overall picture, look at it again, and then see, and then determine like, yo, wait, what's going on, and you go down in lower time frames again, and that's when you change your idea of what the market's doing next.
Yeah.
So instead of a sell, now you're going to go into a buy, and you would have caught some really really nice profits off of that buy opportunity.
Mhm.
Yeah. So do you understand that?
Yeah.
Do you
Yeah. It makes
understand
sense.
where you went wrong?
Yeah, because I know like once that number started going up, like as far as the amount I was losing, I was like, I know that I went in being impatient just
Yeah.
because I thought it was gonna go a certain way, and I was like, let me just um, you know, catch like a bunch of like quick pips, I guess, or
Yeah, like more of a scalping sort of
mhm.
yeah, I get you. I get you on that. I mean, I still do it to this day. But um what one thing that like is also very important is you have to set your stop losses. It looks like you didn't set a stop loss there,
Yeah,
because you were 100% sure it was gonna go your way. Like I'm negative $400. Nope, I'm gonna keep holding because that shit's gonna drop. So no, you don't do that though because that when it comes down to like your actual account, like when you deposit real money,
yeah,
um, you're gonna get all kinds of emotions. Trust me. As soon as you set up your account, your
yeah,
emotions when you win, when you actually get profits and all that good stuff, you're gonna be excited as shit. You're gonna be super excited. Like that's the best part. I mean, that's what I love about trading as well because it can change your entire day if you're in profit. Now, when you're if you lost some money or whatever, um, then it can change your mood throughout the day as well, and you could be pissed off or whatever. But
mhm,
that's why your stop losses are there to kind of give you a little bit of peace of mind, because if you're not looking at your trade, one thing that you always do as soon as you open up your phone, you want to check how your trade is doing, and your anticipation of like shit, where am I in profit, am I in negative, um,
mhm.
you tend to get like some sort of anxiety almost, especially when you don't have any like internet or like Wi-Fi or anywhere, and you're like, oh shit, like I can't see my trade. Like it pisses
Yeah.
me off when that happens. But yeah, so make sure you set your stop losses on. You determine how much you're willing to risk. Okay,
Hmm.
like what was your target? Your target was what were you trying to catch off of that move? If it had gone your way, would you would have been able to catch 10, 20 pips, 30 pips? What were you looking at? Did you have a target?
I usually when I'm looking at the charts, um, I usually like mentally I just say 20 pips
20 pips? Okay, that's
both
fair.
ways.
Yeah, 20 pips is fair, which means that you need to keep your risk to where either it's balanced, where it's 1 to 1, which means your stop loss should be at 20 negative 20 pips, and if your target is 20 pips, cool, you're 1 to 1. Um, a lot of the times so lately I've been able to catch maybe like 30 plus pips each trade, right? So then my stop loss, either I have it at 20 pips or I have it at 30 pips, but depending on the pair I'm trading. In this case, AUDJPY, I think it does move pretty nicely throughout the day. So I would say keep your stop loss with this pair at let's see, 1 hour is gonna give you 30 pips. That's good. 15 minutes, it's gonna give you off of a drop. Okay, so about, yeah. I mean, it AUD pairs, they tend to move a little slower than the others, just like NZD as well. But when you're matched up with a JPY, I think JPY definitely pushes it. Puts out more pips. So I would go with this one maybe anywhere from negative 20 to maybe negative 25 pips as your stop loss, and then I would definitely try to catch 20 plus pips off these moves, because you have a little more room to really see, like in this pair you have a little more room to really see, in case you end up getting too early, you get into early or too late. um, this pair moves pretty slow, so you know I think if you have the right idea, you have the right direction, and you understand all of that, I think you'll be able to really catch some good moves off of this pair. Now GBP pairs, though, that's different. GBP pairs, they produce a lot more pips. So if at that point it really does matter what time you got in, right, or what area you got in at. That way, you minimize your risk of being more negative than and you see positive right away. So that's really why I like GBP pairs, because usually around London session, when I'm looking at the markets, if I'm looking at a GBP pair, I want to see I want to see two things. I want to see the actual direction that it's giving me. Where's the momentum going towards? The momentum is when you start having these like big pushes to the upside, right, or to the downside,
Yeah.
depending on what it is. That's momentum. That's volume. That's liquidity. Those are people who are just like us, pushing the markets right back down or pushing them right back up. Um, when you start identifying that, then you can see, oh well, if we're testing this area here, this for this example, we're testing this area here. I want to see I want to see the market actually just push right back up, right?
Mm-hmm.
So you understanding that and you see this happen, you wait for a small little pullback and you get in because you already see the volume happening right here. There's all kinds of volume right here. Notice the pattern on the way up. You have a big candle, another big candle, okay, and then you had another big candle.
Yeah.
Those are the patterns that you need to like start seeing. A lot of the times these little like these pullbacks, those are how would I explain it? This is more of like us trying to reverse the market, but the big investors, they know how to push the market up higher. So this is us trying to push the market lower, and the big investors taking their profits right away, taking them, just imagine that, picture that,
Mm-hmm.
where we have big investor, they get out, right? They decide to just get out. They know that at some point we're going to try to get in and reverse this market. As soon as they see we're testing another strong level of supply, or I mean, I'm sorry, demand, then that's when they start putting in a lot more orders, a lot more market orders. So that's what drives us out of our stop losses, kicks us out, boom, boom, right? And then at some point we try to get in to continue the trend. Okay, when we do that, they understand that. They understand that we're trying to go in with them, and so the markets then, they start taking their profits, taking their profits, taking their profits, and us trying to reverse the market, and then boom, again they get back in, so on and so forth. So these patterns are the ones we want to identify. If we understand, the bigger picture again, right? We want to make sure that our structure. That's why our structure helps us out so much, because as long as we're not breaking any higher low or any higher high or anything like that,
Mm-hmm.
or in this case any higher low, then we're still good to take our buys. As long as we're not breaking higher lows, we're still good to take our buys. Same
Yeah.
thing if we transition into a downtrend, right? We want to make sure that these ceilings are being maintained and we're still good to take our sells. You see this?
Yeah.
So, keep all that in mind. That's all going to help you, but you have to do your higher highs, higher lows, lower highs, lower lows, even on those lower time frames. That's what's going to help you big time.
Okay.
Any what other questions did you have any?
Um, Not really. I mean, I know that so like even if we're because when I start my live account, it's not
Yeah.
going to be like a huge account, right? So
Okay.
um, pretty much it's the same process, same higher low, higher high. Even if it's no matter the account size or like just going in for like those short 20 pips, 20 pip buys, 20 pip sells like that. You
Are
know,
you, yeah. Are you trying
okay.
to ask like what does it matter as far as like your account, or what do you mean?
Yeah, because I know like it's pretty much the same process if you're going short term or long term. Meaning like if you're trying to go in on a quick like hour trade
Yeah.
compared to something that you're just gonna wait all day long for.
Um, well, that really comes up to that comes down to you. Like, what kind of setup are you getting? If you're understanding that this was your last low point on the daily, right?
Hmm.
This was your last high point on the daily, and then this was your pullback. This is the pullback that you're waiting on. This is your higher low that you're waiting on the daily. Now, if you get in on an entry based off of this setup right here, and you get in on a buy, you know that you're on an uptrend on the daily. This is your first higher low after your transition. So this is more of a long-term trade. This is like if you hold this because you got in at the very bottom here and you just wait for the market to do what it does, um, I would tell you this is like an ideal trade. This is what you want to do. Now, if you want to scalp, like you're mentioning, you want to scalp maybe 20, 30 pips off of the market. It doesn't matter what account size you have. Like, it never matters what account size you have. What matters is the kind of lot sizes that you're going to be using. So, For example, I mean, just you know, what you don't have to tell me exactly how much you're going to be starting off with, but like just give me like a number. Just give me around somewhere, where you're thinking of.
Let's just say 500.
Okay, 500. All right, so 500. Now, with $500, you can trade, I would say 10% of $500, you're looking at 0.50, 0.50. If you're looking to trade, my biggest advice is always to start off with anywhere from 1% to 5% of your account size. That
Mm-hmm.
means that 5% of your account of a 500 is going to be a 0.25. 0.25 lot. I think that's a pretty good lot size, right? Because if you're using proper risk management off of any move like this and you catch maybe 20, 30 pips, you're looking to make 50 to $75. 30
Mm-hmm.
pips, you make $75,
Yeah.
which is still great, right? And not only that, but a lot of the times my style of trading has changed. My style of trading is not just, oh, you know what, I'm just gonna set a trade right here, right? Or like I get in based off of this move right here, something like that. That's my
Mm-hmm.
first trade. Then I see the market pushing down lower, and then I'm like, oh no, you know what? I'm gonna go ahead and just I'm gonna put another trade right here. Now I have two trades. Now I'm riding with two trades. And
Mm-hmm.
then at some point, I don't know, the market tends to just play around and it like ranges around this area, whatever. And sometimes I go in on another trade. So now, am I saying you should do this? It's a little risky because at that point you're not just trading a 0.25, you're trading a 0.75 if you add them
Yeah.
all three together.
Mm-hmm.
But being that like I'm confident about my move, right? I'm confident about my setup. I'm confident about my technical analysis, and I have my stop loss as well. Then I'm out of confidence, I take these three trades all at once. Um, but if you just set one trade again, you make sure you always set your stop loss and set a take profit. If you want to take 20, 30 pips, set a take profit.
Mm-hmm.
So I don't know, let's just say 20 pips is here.
Yeah.
Okay? That's your take profit. And when you do that and you work on your accuracy more than anything, like you'll be catching all kinds of moves, whether if it's 20, 30 pips, doesn't matter, you'll be catching them, and you'll be catching those a lot more often than trying to wait for a big setup to play out like this. Yes, if you catch them from here, good for you. That's awesome. Like if you're patient enough to stay in this trade long term, yes, that's awesome. Um, but again, sometimes like my patience for right now, for my example, I'm not patient enough to see this whole thing play out.
Yeah.
Last night I got into three trades with GBPNZD. I closed two in profit, and then I left one riding risk free with like my stop loss break even, and I was in that trade for about maybe 8 hours, 8 hours, and then all of a sudden the market pushed up and it stopped me out. So I was up like 40 pips off of that trade, and then the
Mm-hmm.
market just decided to turn back around and it stopped me out, and I made probably like 80 some dollars off of that trade. But I was looking the entire time after 8 hours. I was looking at 1,000 plus, like I was 1,300, 1,500, something like that.
Yeah.
And but I didn't close because I knew I knew that move was gonna continue going down, but being that the market decides to jump up before it does drop, it hit my stop loss, and now I'm left with just the two profits I made. So what I'm trying to say is that it's okay for you to aim for just 20, 30 pips because you're going to work on your accuracy, you're going to work on your confidence, you're going to work on all kinds of things.
Yeah.
And that helps you out long term, okay? Because you're seeing the returns you want to see, you're seeing your win percentage increasing, and when you swing trade, it's a little harder for you to expect to get this move every single time.
Mm-hmm.
Okay, so but if you can work on your swing game, hey, all more power to you. If you do that, that's where I'm trying to get to. Um, but if you get it down, that's awesome. That's really good. So, but yeah, account size does not matter. My biggest suggestion for everyone is always get a feel for at the beginning. Get a feel for trading real money, and try to stay in between like 1% to 5% of your account. So if it is 500, look for anything below 0.25. Um, and then once you start getting the hang of like seeing profits and seeing negative and seeing profits and negative, obviously you don't want to see too much negative, but you want to see some profits. Once you
Yeah.
start seeing that and you get used to that, and now you're getting used to a routine where you're constantly just setting trades left and right and you already know what to look for. My biggest suggestion is saving for an account that can be anywhere from two thousand to $3,000 to $4,000, a solid account. Why? Because at that point, this entire time you've been working on your account. If you could see now, if you could bring your $500 account, and with patience and with the with you studying and you constantly getting in at the right moves and all that good stuff, you can grow your account to $2,000, $3,000. At that point, you don't need to save any money. You still keep messing with your account.
Yeah.
But as you continue going up in that account, as you continue to grow it, you want to start moving your lot sizes. You don't want to stick to 0.25 all the time. So, say for example, if you turn that $500 into $1,000, okay, $1,000 now at that point, 5% of your account is 0.50s. So instead of doing 0.25s because you had a $500 account, now you can move it up to 0.50s, and now you're making more money. All right.
Mhm.
If your account moves up to 1,500, now you want to move your lot size to a 1.00. At that point, you're trading one lots. At that point, you catch 20, 30 pips. You're looking at your salary at work or more.
Yeah.
So, and it's very possible. That's the crazy part. So, my biggest suggestion is either grow your account. If you're gonna start with a $500 account, use proper risk management. Then move your lot sizes. The more you make money, the more you start growing that account. Move them up. That way, you see those returns a lot more often. You see the kind of returns you want to see. And at that point, if you build it to 3 4K, that's awesome, because with a $3,000 account, you're looking at 5% of that is 1.50.
Mhm.
Yeah, 1.50, and
Yeah.
then 10% of that is 3.00. So, um, you're looking at making, yeah, definitely getting some nice profits off of those lot sizes, and the kind of profits you want to see. Those are the
Mhm.
kind of profits that obviously you're in this, like, trying to, in the trading industry. That's the reason why you want to see those returns. Because a lot of the times, if you're with like $100 or $200 account, you're trading 0.05 or 0.10. You don't get as motivated seeing those kind of like profits. I mean, yeah, it's cool. You see blue, awesome, you made some money, but you just spent like $100 at a restaurant, and you're like, shit. Well, I made like $20, so I guess I only spent $80 at the restaurant. But imagine though, like, you go to a restaurant, you spend $100, you go into a trade, and off of 1.50, you just made your entire, whatever you spent at the restaurant and more. Like,
Yeah.
and at that point, you're like, oh shit, all right, we're good now. Let's go out to eat tomorrow. So,
Yeah.
um, so again, it comes with experience. You have to start somewhere. So it's good that you want to deposit real money so you get the feel for it.
Mhm.
But have like a larger vision towards it. Either try to grow it or try to save for a really nice account. Those are my two biggest like things I always start off with everyone. It's like, you have to get the feel for trading real money, and you have to plan for the future. Plan for the future. Where do you want your account to start getting into bigger lot sizes and make it more of a full time thing. More of
Yeah.
a constant thing that you're looking at every night, every morning, and can potentially just like replace your job. So,
Yeah.
um, but yeah, I mean, does that answer your question? I know it went to like like into a lot of detail, but does that answer your question though?
Yeah. 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 It does.
Cool.
Mhm.
Is Steven, I don't know, did you get with Steven though about like starting you with like the Ole Pay and all that?
Yeah. I actually messaged him yesterday. I told him that I'd message him um like around the 31st, because we
Okay.
get a bonus at work um
Oh yeah, I know.
for
Y'all,
for our
y'all get
next
those
check.
bonuses. I
Yeah.
know. No,
So
no shit. They went back to the bonuses. I know they took them out like for quite some time, right?
they took him out, but the appliance department, they haven't, appliances like up in the air.
Okay.
and that's a
I know what
department that.
appliance is. Yeah, I know. Yeah,
So I'm getting a bonus because I'm a supervisor.
that's
But when
right.
I was but when I was in appliance and everybody that's over at appliance
Yeah.
right now does not have a bonus, unfortunately. But that's
Well, that
something that
sucks.
they, yeah, I know. And it's like little. It's the only department that doesn't have a bonus.
Oh, damn, that sucks.
Yeah.
Yeah,
So.
but well, I mean, with the bonus, like you guys get it quarterly or something like that, right? I think
Hmm.
that's yeah, nice.
Yeah.
Yeah, oh yeah, absolutely. Like if that's something you're trying to invest, you're waiting on that to invest that money, do it. Fuck yeah,
Yeah.
hell yeah. That's something that I did as well. Like I didn't personally this year around. I didn't personally actually like saved money from from my job. What I did was I had savings from like back when I used to stream on Twitch and stuff like that. There was like a few hundred some dollars. Then I added a little more to it to make it
Yeah.
a two. No, I started with $3,200 this year, and then I built it since.
Yeah.
So yeah, no, I mean that's good. Definitely do that. Like start off with if you're gonna start with a $500 account, make sure you're trading to your account size, whatever your account can withhold, right?
Yeah.
Um, and then gradually start moving your lot sizes so you can see more profits. And yeah, I mean, as soon as you get to a one lot, you don't want to go back anything lower than that. Trust me, like and you won't. Like you'll be like, nope, this is where I'm staying now. Like,
Yeah.
yeah, because you're gonna get so used to seeing your the return you want to see, and that's what
Hmm.
motivates you. That's what motivates you to continue studying. That's the best part.
Yeah.
Because I could be on like most of the day I'm on these charts. Like as soon as I wake up, I get on the computer. As soon as I
Hmm.
eat dinner or lunch or dinner, whatever it is, I get back on the computer. Towards nighttime, towards around this time, then I'm looking at the charts again. And then at
Hmm.
work, I don't have my computer with me, but I have my trading view on my phone. I get on the
Yeah.
trading view there, so I'm like constantly on there, and it's not because like I'm trying to look for a setup every single time. Yes and no. The reason I always look at them is because I genuinely enjoy looking at the charts. I don't know. I like
Hmm.
looking at them.
Yeah.
Especially when you have your markups and you know what each one of these like highlighted areas represent. So
Hmm.
um, but yeah. So anything else that you may be like struggling with that you had any questions with, like your entries, anything um, that we've gone over as far as like the course, anything like that?
Not really. No, I got a lot of information from the 3 day course.
Fuck yeah, nice. Right on.
Yeah.
Cool.
Hmm.
I have two guys starting on Monday. Actually, no, two guys and one girl starting on Monday. So that's
Okay.
gonna be interesting because
Cool.
that's the first time I'm gonna put three people in one group and teach them
Yeah.
those 4 days, 3 days. I'm sorry. Um, and so yeah, so that should be exciting. I'm excited about that. More people coming
Yeah.
in, and
Yeah.
yeah. So and then we'll have our webinar on Thursday,
Hmm.
and I'm sure a lot of people got like questions because I've been getting DMs and everything like that. Um,
Okay.
and another cool thing is I won't be here, but I'll be in Aspen, up in a mountain somewhere. I'm gonna take my laptop with me, so I'll definitely be able to like attend. So,
Right.
yep. Um, cool. Anything else? Are you good?
Yeah, I think I'm good for now. I'm gonna
You can schedule another one-on-one. You can schedule them as much as you want. I would normally go with like once a week, something like that. Keep scheduling them, and whenever you come into a one-on-one, and I'll mention this in the group, but have questions ready. Have something that way you anything that came up like throughout the week, write it down real quick. I want to ask
Okay.
this, or you can ask it during the webinar. Like if you got any questions up until the webinar, um, you have today, you have tomorrow, and just write down your questions. Anything that you feel a little confused about. I still don't get this. I want to understand this, and then
Yeah.
I can go over it with you, and we can answer that for you.
Okay.
Cool.
Sounds good. Hmm.
All right, for sure. So I did record this. What I'll do is I'll go ahead and upload it on YouTube, and then I'll send it directly to you.
Okay.
Okay.
Cool.
Cool.
All right.
All
Thank
right then.
you.
You're welcome. Thank you. Hey, thank you for using the website. Like I wanted to see how it actually came out because I got an email that says you signed up, all that good stuff. I was like, hey, that's cool. So thank you for using that. And
Well, for the to schedule the one on one.
yeah, yeah, schedule the one-on-one.
Oh,
Yeah.
really?
Did you put in your phone number or you only put in your email?
No, put in both.
Oh, but did you get a text message or no?
No.
Oh shit. Okay, so I gotta fix that. But
Yeah, I got the email right away though.
oh,
But,
okay, cool. All right, that works. But cool. I'll send you this as soon as I get it uploaded. All right.
cool. All
All
right.
right. Have
Thank
a good
you.
night. You're welcome.
You too.